Buckle up, Bank of Canada is going to be cutting rates on September 17th. We are expected to see at least a 0.25% cut on the 17th, with the possibility of another 3 rate cuts to come in the following meetings by the Bank of Canada to round out 2025. And ultimately, what will happen in 2026 is anybody's bet right now. But if we continue to see these data points roll out as bad as they have been for Canada in the last little while, you can bet your bottom dollar we're going to see some more rate cuts coming out of the Bank of Canada. So we'll talk about what that means for Canadians and what it means for variable rate mortgage holders in this episode. Stay tuned. Once again, thanks for subscribing to the channel. If you have not subscribed, we invite you to subscribe to the channel. Hit that little notification bell while you're down there. Don't forget to leave your thoughts, questions, and concerns in that comment section. We want to hear from you. Like and share the video. But now, let's get right into it. Now, ultimately, for many Canadians right now, as we continue to see the Bank of Canada, or for the Bank of Canada that paused over the last little while as they waited for the data to roll out, to get to the point now where we're seeing everything we projected to happen happening. Now, just a little quick refresher. We talked about this months ago. Ultimately, there's a lag in all of the things the Bank of Canada does, from them hiking rates in 2022 and ultimately how that took time for the inflation numbers to pull back, to now having those consecutive cuts that we saw over the course of 2025, the pauses as they waited and digested those cuts to see if it would actually move the needle in the Canadian economy, to which it really hasn't. Remember, ultimately, yes, we have a tariff scare. We have a tariff situation happening here in Canada with reciprocal tariffs, even though they've cut back a little bit here on $21 billion worth of reciprocal tariffs. But we have automotive tariffs, steel and aluminum. We also have concerns about the future direction of the housing market, concerns with construction jobs, jobs in general, as in lost 65,000 jobs in the last month alone. I mean, ultimately, with the unemployment rate even higher than that, negative growth in the economy, all that front-loaded exports that happened. We talked about it last week. If you haven't checked it out, check it out. But ultimately, right now, all the data is really not positive. All that with the U.S. basically cutting potentially as well this month. I mean, that gives the Bank of Canada cover to cut and cut hard. And I believe that it will be the next steps for the Bank of Canada. Now, with all that being said, ultimately, this is a conversation. Anything can happen between now and September 17th, and anything can happen ultimately after that. We could see some reversal in this data. We can see some improvement, which will give the Bank of Canada maybe cover to hold following September, but highly unlikely. I predict the Bank of Canada is going to be cutting because of the fact that they need to reverse course to scathe off a recession, if that is what they really want to do. Now remember, the Bank of Canada can always cut, but it takes time. Those cuts take time. So just because they cut on September 17th doesn't mean it's automatically going to move the needle, for not only interest rates, but ultimately what it's going to do is not move the needle right away for the economy. So we still need to give it some time. Now, speaking of rates and where things are right now, a lot of calls about clients that are looking at renewing their mortgage, purchasing, maybe getting out of their mortgage, refinancing into a new mortgage product or rate, and ultimately, do they suit or should they take on a variable rate mortgage is literally the question that we get asked. Now, with most of the clients that we're talking to right now, it's very important that you, as a viewer, understands that it's not a one-size-fits-all approach. You shouldn't just take a variable because of the fact that everyone else might be doing it or your friends are doing it. It's important to understand, take a step back and say, hey, what does my monthly budget look like? Can I afford to, make smaller payments or increase in payments if interest rates end up going up, like we saw back in 2022? Number two is, how well do you sleep at night? Is your sanity worth the cost of taking on a variable rate mortgage? If you're one of those people that just can't sleep if they don't know what their payments are going to be for the next little while. Because taking on a variable rate mortgage means that you need to stay in tune with everything that's happening with the Bank of Canada. So remember, the Bank of Canada, the Canadian economy, prime lending rate from the bank is all basically for variable rate products. So when the Bank of Canada governor comes out and says, hey, we're cutting the policy rate, that means that the prime lending rate with your institution moves, right? So right now it's at 4.95. So if they cut a quarter, obviously 0.5%, that will move that down. With the Bank of Canada's 2.75, maybe they'll bring it down to 2.5. Prime lending moves down. Maybe your payments move depending on the type of mortgage that you have, the variable that you actually own. Not all the banks, not all variable rate mortgages are created equal, right? So it's important to understand that the some that are static means that your payment stays the same. More money may go towards principal than towards interest. Your amortizations have come back in line. Remember that conversation we had many months ago, almost a year ago now, where interest rates had gone up and then all of a sudden these amortizations shot to the roof. On the other side of it, you have adjustable rate mortgages. And we've talked about it ad nauseum on the channel, but it's super important because we get this question all the time, is I'm looking for a mortgage where the payments move. That's a true adjustable rate mortgage. That means if the Bank of Canada cuts their policy rate, the bank therefore changes their prime lending rate. That means your payments on your mortgage will change almost instantaneously, generally within the next little while or within the next 30 days. So you have to keep that in mind, that that's something that you might be chasing. But on the flip side of that, remember, this is why it's important to stay in tune with it, is that if the Bank of Canada down the road and you take a 5-year or maybe even a 3-year variable, depending, that policy rate changes, right? If the Bank of Canada sees inflation tick back up as a result of them lowering interest rates too aggressively or too fast, then the Bank of Canada may decide to hike those rates. Remember, it's easy to say the Bank of Canada what they can do. Some people are going to say, oh, but this and that, the other. Here's the thing. When they lowered the rates, the Bank of Canada came out and said we're going to keep rates low for a long time. They did for a little bit, then boom, they raised them. Is that going to repeat itself? Let me know in the comment sections below. Let me know what you think. But ultimately, you have to be very cautious that anything could happen at any given time because the Bank of Canada can make those moves. So all this to say that you need to choose the proper product for you. And understanding that right now, maybe we're seeing some of those discount rates that are not as aggressive as what people had originally got. I know a lot of clients that got their mortgage back 5 years ago, they got prime -1. So right now that would be 4.95 minus 1%, or 3.95. Right now we're seeing discounts anywhere from around prime -75 basis points to almost prime -1 for insured purchases. Those are ones with less than 20% down, the default insurance premium. So you're having this range ultimately depending on the type of lender, the types of bells and whistles that you want on your mortgage. Ultimately, is it a static? Is it adjustable? Ultimately, what do you think is going to happen with the Bank of Canada's overnight lending rate? Do you think they're going to move down to well below 2%? Is that something that you have in your cards? And if so, are you willing to bet on it by taking a variable rate mortgage? That is the true question. And ultimately, right now, as we continue to have this conversation for mortgage holders, ultimately understanding the key component about a variable, the major benefit of having a variable is that if those interest rates end up going down, that you can always lock into a fixed rate mortgage for the remaining term of the mortgage. So if you take a 5-year variable and let's say 2 years elapses and then all of a sudden you're looking, hey, I want to take on a fixed rate. Interest rates may go up in that time frame, go down, who knows, right? Nobody really knows. So you might be able to lock into a 3-year fixed at that point. So understanding that you're not locking in for another 5 years, you're locking in for a remaining term, or you might be able to renew into a fixed depending on your product. Obviously, talking to a mortgage professional, get the right advice, will help you make the best decision at no cost. So that's super important. And last but not least, as I said, just something we keep on reiterating, just because the Bank of Canada is going to potentially cut on September 17th and maybe 3 consecutive cuts down the road, it doesn't mean that fixed rate mortgages are going to be moving lock and step. That might not be the case, depending on what happens ultimately in the US, what ends up happening with Canadian expenditures, our debt here in Canada, ultimately what happens with bonds. I mean, this is really the case. So if we see those continue to ease, maybe we'll be in an environment where variable rate mortgages are going to be priced a lot more aggressively, a lot cheaper than fixed rate mortgages. But what's the trade-off? A couple of bucks more on a fixed rate to sleep at night versus the volatility of a variable. What's the best option? But what's the best option for you is the question you should be asking. Don't always look at the rate, look at the overall picture. Sometimes you pay a little bit of insurance premium, you go fixed, you can sleep at night. Some people want the variable, they want that little bit of a discount and are willing to take on the risk associated with it. But let me know in the comment section below what you think is going to happen next with the Bank of Canada on September 17th. Will it be a quarter, 0.5%, or more? Nothing. Let me know. You think the Bank of Canada is going to continue to cut? Let me know in the comments section below. I want to hear from you. But until next week, thanks for stopping by. We'll see you all next week.